Abhay Agarwal, founder and fund manager, Piper Sireka, also joins us on the show. Abhay, I understand you're a big cricket fan. You managed to get your hands on that bat which was signed by the winning team. But did you find yourself yesterday at the Marine Drive as well when the team was taking a victory parade?
Yeah, no, so fortunately, I got to spend, some time separately, so I didn't have to be part of the crowd. But I would have loved to be part of that crowd, so much of positive energy, big welcome back to our heroes. And, especially coming off the final loss in the World Cup to Australian team, who we had defeated earlier in the same tournament in the 50-over World Cup. I think it was remarkable. I wish I could have been part of, the celebrations yesterday on the streets, but unfortunately I could not. But yeah, we celebrated anyways, and we'll continue to celebrate, I think, for many days to come.
Abhay, we were just wondering what that bat is going to turn out to be in terms of multi-bagger in the next 10 years.
Yeah, I mean, I mean, these are things which are just priceless. I mean, you can't put a price on them. They're signed by all my heroes. Starting from Kohli and ending with Rahul Dravid. So absolutely, it's a prized possession that I guess will stay in the family for decades.
Indeed, a family heirloom now as far as that bat is concerned. But let's talk markets and which are those stocks which are you probably going to keep in the family for a long, long time. HDFC Bank is a stock that everybody used to think, forms part of that family jewel per se. You also had the likes of Titan, etc. But all of these defensives are coming under pressure right now. Do you think it's time to probably churn the portfolio? But if you have a long view, just stick with them. What's the view?
Yeah, so I think on HDFC Bank, and not only HDFC Bank, but all the private sector banks, again, not a buy or sell recommendation. So we don't have HDFC Bank in our portfolio since January last year, once they announced the merger with HDFC Limited. And the reason is that we could see that for the entire large cap private sector banks, the peak NIM is already behind us. We see margin compression. The cost of deposits is going up. The deposits themselves are not going up. So the cost of funds is going up. At the same time, there is pressure from RBI to transmit the rate cuts down to the borrower level. So in that scenario, it is very clear that for next year or so, you will see a margin compression. You will see a slowdown in business till the private capex picks up big time. The credit offtake at enterprise level will slow down. So baking into all that and plus looking at valuations, which are still not cheap despite the sideways correction, still looking at 2.5 times book value multiple, making these banks the most expensive banks in the world. We have stayed away from private sector banks. Only bank we had was ICICI Bank. So that is a space that we are not in a hurry to get into. We'll watch. I think it will go sideways for some time. But what is exciting for us is looking at some of the sectors that investors are not looking at, insurance, both life and health, agrochem space, small companies, big companies there. I think there is a big focus already from the government on agri, increasing the farm level income. We are looking at good opportunities in pharma space, especially pharma generic exporter companies, which have not done anything for many years. So I think there are opportunities in the spaces that have not been market favorites. And I think that is where money is to be made over the next 2 to 3 years.
Since we're on the subject of pharma, Abhay, wanted to get your views on Emcure as well. Great subscription. Just few hours left, I think, before the IPO closes. Is it a subscribe still?
I think so. I think the market has appetite for new listings, and Emcure is a company that is what I would call is a very established company. They haven't really hit the growth bucket over the last 3 years, if you look at the numbers. But I think very experienced management team, very solid market presence. And I think the market has appetite for these larger mid-cap companies that are listing now. So not surprised to see the subscription levels. And I think the listing also should be quite positive for a company like Emcure.
If you're coming in for now, the market is actually doing quite well. In the last few minutes, there has been a vertical rise. So 24,350 on the cards, and it warrants a look as to what's driving this last minute rally. I think Reliance will be the one which is perhaps seeing a bit of a spike because there's this news doing rounds about a Jio IPO happening soon, and that's the reason that stock has seen a very sharp spike right now, 2.5% for Reliance, and when that moves, of course, the rest of the index has to follow with it. Abhay, the other big theme that we have been talking about for the last 12 to 18 months, and it's fairly discovered now, is manufacturing and defense, and even electronics, manufacturing, etc. as well. Do you still find value within that basket?
So I think manufacturing as a theme we are very bullish on. I think that's almost a decade story from here now. It will continue to play out. Now, some parts or some segments in manufacturing will obviously find fancy at different points of time. Defense and PSU manufacturing is definitely right up there as far as market fancy is concerned. And I think that's one of the reasons that some of these stocks are building in future returns into the current price. So I don't know how much return juice is still left for investors who want to come in right now. But if we look beyond defense and if you look at core manufacturing as a segment, especially the manufacturing companies that are exporting, I think there is a tremendous opportunity there, especially for electronic component manufacturer, electronic manufacturers. I think for the first time, we are seeing through our channel checks and company discussions, large electronic manufacturers in India are accessing the US markets directly, not through tie-ups. And I think all this will start showing up in their numbers. And I think market will start recognizing that also. Other than that, the outsourced manufacturing of electronics is a big theme that has already played out and still playing out. So I think overall in manufacturing, it's a long way to go in form of returns are concerned. Investors should look at what is still not caught fancy, but is promising to really make money in that space.
Thanks, Abhay, for joining us on the show.
If you like this video, then like, share and subscribe to ET Now.